if you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, "I'll pay you 15," you don't sell it because the quote's 15. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. Many years ago, that it's an invisible tax that only one man in a million really understands. The best investment against inflation is to improve your own earning power. The best passive investment, I think, is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting, in the United States, the value of the dollar since I was born has declined by 94% to 6 cents. But things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world. But actually, it's worked out pretty well, so I have no complaints.
We're a net buyer of stocks over time, and just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. When stocks are down, we're going to be buying on balance, and who wouldn't rather buy it, at a lower price than a higher price? People are really strange on that. I mean, because most of your listeners are savers, and that means they'll be net buyers, and they should want the stock market to go down. They should want to buy at a lower price, and they have that feeling that they just feel better when stocks are going up. I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century, and since that century has ended, it's more or less doubled again. American business is going to do well.
You'd be surprised at my days. I mean, they're very unstructured. No meetings, none. I mean, I don't like meetings, and I read a lot. I wish I were a faster reader. I'd get more done. But I do read a lot, and I'm on the phone a moderate amount. Our businesses run themselves basically out there. My job is allocating capital, and that's what I'm thinking about. But I don't like to have things all packed hour to hour to hour. And Bill and I are both extraordinarily lucky. I mean, we really get to do what we like to do, the way we want to do it, with people that we choose to be around, and they're terrific. I mean, we've really got everything our way, and we're very fortunate.
Who was Ben Graham? He was your primary mentor, model?
He was a wonderful man, and he was my professor at Columbia. I read his book when I was 19 at the University of Nebraska, and I'd started investing when I was 11, and I started reading about it when I was like 7. So I'd gone through I read every book in the Omaha Public Library that there was by the time I was 12 on investing in the stock market. And I had a lot of fun, but I never really found out, I never got grounded in anything. And it was entertaining, but it wasn't going to be profitable. And then I read Graham's book, The Intelligent Investor, when I was at the University of Nebraska, and that just opened the whole thing up to me. Yeah, and I named my oldest son is named Howard after my dad, Warren Buffett, and he was a marvelous man. Never expected anything from me. Kills great businesses. If you look at, I do believe in looking at history, and I like to study failure, actually. My partner says all I want to know is where I'll die, so I'll never go there. And we want to see what has caused businesses to go bad. And the biggest thing that kills them is complacency. I mean, you want a restlessness, a feeling that somebody's always after you, but you're going to stay ahead of them. You always want to be on the move. And when you've got a great business, like Coca-Cola, which there aren't any like Coca-Cola, but you really, The danger would always be that you rest on your laurels. But I see none of that, obviously, at Coca-Cola. But that is the key, to compete the same way when you've got 1.8 billion servings being sold daily as when you were selling, 10 a day. The nature of capitalism is that people want to come in and take your castle. It's perfectly understandable. I mean, if I'm selling television sets or something, there's going to be 10 other people that are going to try and sell a better television set. If I have a restaurant here in Omaha, people are going to try and copy my menu and give more parking and take my chef and so on. So capitalism's all about somebody coming and trying to take the castle. Now, what you need is a castle that has some durable competitive advantage, some castle that has a moat around it. And that moat, one of the best moats in many respects, is to be a low-cost producer. But sometimes the moat is just having more talent. I mean, if you're the heavyweight champion of the world and you keep knocking out people, you've got a competitive advantage as long as you can keep doing it. And it's very profitable if you're the one that happens to be able to do it. If you can turn out great motion pictures, I mean, Steven Spielberg, I mean, he's a fellow to bet on, and it has enormous economic value. Famous lesson about a margin of safety, that you don't drive a truck that weighs 9,900 pounds across a bridge that says limit 10,000 pounds, because you can't be that sure about it. If you see something like that, you go down a little further down the road and you find one that says limit 20,000 pounds, and that's the one you drive across. I just read and read and read. I probably read 5 to 6 hours a day. I don't read as fast now as when I was younger, but I read 5 daily newspapers. I read a fair number of magazines. I read 10Ks. I read annual reports, and I read a lot of other things too. So I've always enjoyed reading. I love reading biographies. It never bothered me if people disagreed with what I thought, as long as I felt I knew the facts. I mean, there's a whole bunch of things I don't know a thing about. I just stay away from those. So I stay within what I call my circle of competence. And Tom Watson said it best. He said, I'm no genius, but I'm smart in spots, and I stay around those spots. Well, I try and stay around those spots, and I just don't have a problem if somebody says, you're wrong on something. I go back and look at the facts, and I think that really is much more important, frankly, than having a few points of IQ or having an extra course or two in school or anything of the sort. You need emotional stability. If you think you're going to be a lot happier if you've got 2X instead of X, you're probably making a mistake. I mean, you ought to find something you like that works with that, and you'll get in trouble if you think that making 10X or 20X is the answer to everything in life, because then you will do things like borrow money when you shouldn't, or maybe cut corners on things that your employer wants you to cut corners on. Or it just doesn't make any sense. You won't like it when you look back on it. 3 things in hiring people: look for integrity, intelligence, and energy. And he said if the person didn't have the first 2, that the latter 2 would kill them, because if they don't have integrity, you want them dumb and lazy. You don't want them smart and energetic.